Good morning, everybody. Welcome to Friday, 5th of July, a new world in the UK. I had to look out the curtains, make sure the place wasn't burning to the ground. All's good. Back to normal. Summertime. Rain's here. Love it. Morning, Kay. How are you in this new dawn that we've got?
Good morning, Ryan. Well, it very much looked like the old world waking up and seeing it rain outside. So that bit hasn't changed. And for the rest, yeah, well, new world.
Same shit.
Yeah, exactly. And I don't even know. I don't even know what to say. We're going to have to wait a bit, I think.
Yeah, we'll have to wait and see what comes of it. But here we are. Anyway, life goes on, and on it must. Right, let's get through the bits and pieces. Obviously, a bit quieter on the headline front, given that the US was shut yesterday. So, got a little time to put our feet up as well. Anyway, let's kick off. The PBOC fix was down a little bit, 712.89 versus 713.05. It's a little bit down there. We are seeing a bit of a pullback in dollar China. This is looking more a bit of a broad sell-off in these types of things. If you look at other pairs, Rand's doing similar, MEX is doing similar. So this is a bit of a dollar move rather than anything related individually to those countries. So I'm keeping an eye on that one because it's going against the narrative of a potentially weaker one. So as always, there's two sides to a currency and you need to focus on both of those. There's been no real headlines out of China, save for further, how should we say, extending of the news of their possibility of getting into borrowing bonds and then selling them out in the market as part of their sort of yield control program that they're looking at. There's been further progress on that. Nothing of note. They're signing some agreements with some banks to be able to do that. So that ball is still rolling. Over in Japan, Suzuki, Finance Minister Suzuki has been out saying inflation remains a concern even after the recent wage gains. Says that it's true that the weak yen has had a great impact on prices and that it's been pushing up import costs. There's been a piece out about the BOJ that at their next quarterly branch managers report, where they go around asking all the different areas how things are faring. Sources are saying that they're going to be writing in that they're seeing broadening wage rises among the regions, particularly coming from smaller firms, which is good news for Kishida. Of course, the interns who write this stuff are putting two and two together and saying that it's going to fall into the potential for another BOJ hike, but we shall see whether they deem these rises strong enough and the economy strong enough for that to happen. Any thoughts about that news in Japan, Kay?
No, not really, but we finally have, because we were wondering, or perhaps not having seen all those, all the news around it, but we finally have like a pretty precise number stuck on the smaller firms' wage increases, around 4.5%, which is reasonable because usually they lag the bigger firms. So I think it's not too bad. And I guess that if the Bank of Japan is going to pick up on the broadening of the wage rise trend, that's another little piece of the puzzle why they may be on the move at the end of the month. So yeah, I think to be taken into account, to be ranked into the column where the positives could be for the Bank of Japan to be on the move.
Yeah, and but that Suzuki line saying that inflation remains a concern even after the recent wage gains, that might be a little bit of a negative headline if that's what the BOJ are thinking too. Maybe they want to see a bit more from the data before they pull the trigger on another hike. But
if inflation is too high, they will hike sooner. Right?
Yeah. But I think he's saying that. Well, I'm taking it that it means that inflation is you know, not as high as it should be after the wage gains.
Oh, really?
I might be reading that the wrong way around, but either way, we'll get some more CPI data before the BOJ meeting anyway, and we'll see what that brings as well. But there's still, the market is floating around the idea that we will at least get a change of, or their announcement on QT, and possibly a hike at this July meeting as well. So that's still in the frame. No doubt we'll get more sources pieces a little later towards that meeting as well. The leaks like to come out on the BOJ meetings. Right, moving on. ECB had their minutes out. Again, these things are largely redundant after we've heard, well, the day after the ECB, we heard from over half the governing council anyway. In the minutes, there were some doubts about whether the recovery would take place as expected. Those green shoots, as we know, have been pretty much stomped all over. Some members felt that the data since the last meeting had not yet increased their confidence that they would get CPI to converge to 2%. They said any further delay in bringing inflation back to target could make it more difficult to continue to anchor inflation expectations in the future. I'm talking about that bumpy road that we're seeing in inflation. Well, those doubts about whether the recovery would take place have been have grown further. German industrial production today was a bit horrific.
Yeah, Ryan, you're not on. Oh, yeah, there we go. Sorry.
Yeah, I'm getting there, mate. I'm getting there.
I just want to have this one over with quickly because we're running into the weekend.
So yes, we've had some pretty bad data. Well, from a lot of Europe, industrial production there, a whopping minus 2.5%, was expected to rise 0.2%. So that was shocking. The adjusted numbers, the workday adjusted year-on-year numbers came in at minus 6.7 versus minus 4.3 expected and minus 3.7 previously. France as well, a stinker of a number 2, was only expected to fall 0.6%, fell 2.1%. Again, their year-on-year number coming in at minus 3.1%. Was only expected to drop 1.1%. Manufacturing production. Let's see. I don't know if it shows both numbers here because it's got the industrial production. No, so manufacturing in France as well was also a shocker, down 2.7% month on month and down 3.9% year on year. So as we can see, these are all May numbers, and yeah, those green shoots well and truly stomped upon. Italy retail sales came in a bit better though at 0.4% month on month. We're expected to rise 0.2%. Eurozone numbers as well, a little bit softer than expected, but still up 0.1% month on month, 0.3% year on year. Still all these 0.0 numbers coming out. Very lackluster growth we're seeing across the Eurozone as well. Canada, they had their services PMI that I don't even know if it's on the calendar. No one really looks at it. Is it there? No, it's not. So that came out yesterday at 47.1. So going into contraction from 51.1 previously as well. Mr. Northheimer, I'm not sure what problems you're facing. Anyone else got any sound issues? I assume Kane can hear me loud and clear. Yeah. I can hear Kay loud and clear, so maybe some settings on your side, mate. Gab, yeah, sounds good at all. So we shall crack on. There's maybe a bit of weekend risk or not to keep an eye on. Hezbollah have been spouting off saying they will attack new sites in Israel. So again, that's just a little bit of a weekend warning that bum fight is still rumbling on. However, on the other side, there is the prospect of a deal happening, a hostage deal with Hamas happening. It seems that there's been, or might be on the way to a bit of a breakthrough. An Israeli official says that the Hamas proposal includes a very significant breakthrough. So maybe if that gets sorted, that will lower tensions with Hezbollah. It's all part of the pot, shall we say, but that might be some weekend risk to keep an eye on. Over in France, we've obviously got these French elections, the next election risk for us trading. And just a bunch of polls have been out on the seat numbers that's expected. Again, these are all coming in roughly around the same numbers like they were for the percentage polls on the first round. So Le Pen is seen winning between 210 and 240 in one poll. That's short of the 289 seats needed for a majority. This left coalition are seen winning somewhere between 170 and 200, and Macron between 95 and 125. Another poll had Le Pen 210, 250. Another one had 205, 230. So you get the ballpark numbers coming out here. The actual results of the first election were pretty much as expected, though maybe on the lower side for Le Pen compared to some of the high numbers in the polls. You know, she was polling 36, 39%. I think she came in 33% in the end. So the real risk for the French election is, and I'm in two minds about this, a Le Pen majority is likely to be the most negative outcome. And I'm saying that based on what happened last week, where the numbers indicate she wouldn't get a majority, and we saw the euro rallying. So if she gets a majority, one would think that that's the most negative outcome. However, if it's a hung parliament, the euro might be buoyed that she hasn't got a majority, but I don't think that positivity lasts, because then we're in a French political mess where there's going to be effectively no government for X amount of days or weeks while they all run around trying to cobble things together. So that's not, you might get an initial reaction like that again, depending on the result Mondays, but I don't think that's a reaction that really lasts, because, as I say, if the French government, if there's no French government because of a hung parliament, then investors aren't going to like that for the more longer term. On the other side, I don't know what happens if they cobble together a government made up of Macron and the left wing or whatever, because it's unlikely that those guys will agree on anything anyway, and it will just be more bum fighting going on. I don't see any reason where there's any stability or good news for France.
No, no, that's what I said. I mean, the best we could actually expect is a lame government that can't make can't take any decisions anymore. And then there's this thing about this possibilities, right? So it could be that I haven't seen all those 200, more than 200 names withdrawing to be able to make a more solid front against the RN. But it all depends who gets elected on that left side as well, because if those are people that already don't agree with Macron, it's going to be a real mess, I think. Now, let's assume for 1 second that they succeed and RN doesn't get the majority and gets even a little less than what the polls are saying, or towards the bottom end of the of what the polls are estimating. There is also this thing about that Macron could, I'm not saying he will, but could actually call for presidential elections if he then can rally enough people from the center and the left. So there could be a right old mess coming there as well. I actually, as I was saying as well, I mean, if you don't get a whole majority, we could have a little bit of this knee-jerk reaction in the euro. But I fear that if it only depends on the French, it could be short-lived, and then the market will relatively soon recall what the data are in Euroland, of which we had another good example today. And then I mean, what is for sure is that I probably won't have a position in euro beyond what the US data will tell us today. I think if the US data tell us something or the Canadian data tell us something, I will be looking for other currencies to probably trade. Because there is absolutely very little that we can say about waking up on Monday where the euro will be. Maybe not especially against the dollar, but anywhere on the crosses also, and that can then in turn weigh or pull the euro dollar further. So yeah, I don't see an outcome that is really extremely positive over there.
Yeah,
I can't see one.
yeah, exactly. My thoughts the same thing. Right, just while Kay was speaking, PM Sunak has come out and announced he's going to step down as the party leader. No surprise there. Doesn't really mean a thing. We've also had Fed Williams popping up, saying they still have some way to go to reach 2% inflation goal. Inflation progress is significant, but the job's not done yet. So he's not ready to start wielding the cut vote just yet. Right, so on to the UK election. There's no real news. This is the first election probably since 2010 that I haven't stayed up for to look to trade it or anything. I was telling the guys in the room, I got messaged by my mate Harry at Live Squawk asking me if I was staying up for it. I was already in bed when he messaged me. So we've been saying this all the way through. I've been saying this all the way through because it's been such pretty much a foregone conclusion. There's been absolutely zero move of note in the quid. We've had a little bit of an uplifting cable. It was staying bid, but there was no real move even over the first exit poll showing that it would be a landslide. So really, we're moving into that phase, the what next phase regarding policy, what it's going to mean for fiscal numbers, taxes, and that's the stuff that traders and investors will really want to know about. That won't be known until the government's in place. I think 17th of July, I think, is the date when Starmer goes and forms his actual government and Parliament reopens. Maybe they'll, if it does open, it'll be open for a couple of days before they shut it down for the summer. So don't expect much to come from that lot, but that'll be the next phase of the thing. So for trading the quid, we're moving back to trading everything else, and that will include the US data today. As you can see, cable still remaining pretty strong, but so is the euro still ticking up through the 108s. So, and this answers your question, Charles, which you may have missed just at the start. Why you're asking why is the rand so strong? The rand isn't strong. The dollar is weak. This is all coming from the dollar side of things at the moment. There's, worries about the dollar, as we mentioned, dollar China heading down, dollar rand heading down, dollar MEX heading down. So if it's got a dollar label on it, likely it's showing a bit of weakness or seeing a bit of weakness at the moment. So that's the mood of the market going into the NFP. I'm thinking that if the data is good today, that's going to be an opportunity to sell some dollars because I'm getting the itch now. And we're saying it yesterday and saying it for a couple of days. I'm getting the itch to be a bit short dollars. So I might pick my poison. Cable might be a good one. Euro dollar might be a good one. But you can probably cast your net quite wide and you won't be far wrong if you're trading that way. And again, just looking at euro sterling, because that can give you a bit of an influence whether the pound is moving or whether it's things like the euro and cable are moving together. And euro sterling is not doing an awful lot. This is one I'm still happy to stay short in. I'm going to see what happens with this French election stuff. I'm looking to see whether a hung parliament bad news is a bit bad for the euro, and we might see a bit of flows into the UK. But I'll be guided by the levels. If we break 85s, I'm going to get out. And if we see a move to 84s, I'll be, or down to those low 84s, I'll be taking some profits. So I'm not expecting anything massive from this. I'm not expecting it busting down through 84 or, running up to 86, anything like that. But we'll keep an eye on it. anything else from you guys? Just let us know in the chat function if you want us to have a look at anything in particular. Otherwise, yeah, mate.
Yeah, I just have one little extra piece of information that I read in the South African paper, online papers or business websites, saying that there's a bit of positiveness right now surrounding Eskom because they have had a lot less load shedding than before. So that's a bit of a positive. That is one of those big issues that we have in South Africa. About Eskom and the electricity and the grid and stuff, and there's been a bit of positive news on the back of it. And then, as Ryan said, of course, it's a global dollar thing. Emerging markets are also, how should I say? If there's no bad news, it's taken as relatively good news, because we can't forget that it's not as high. They are not as high, the interest rates, as in Mexico, for instance. But it's still a high yielder, and you need to, if you're going against the grain, or if you're going against the currency, you still need to be right sometime soon. And if it takes too long, or if there is no bad news, they have the tendency of coming back a little bit, and that's what we see, especially in the mix now as well.
Yeah, very much so. 18 still the fairly important level right here. We do have a sort of moderate level in the middle here, 1820s, that we're just starting to hold below now. We've broken it. Obviously, that 1850 remains the doozy up above. I might have, I don't know. I'm loath to be long dollars, but that 1740 was a decent level down there. So I might have a little nibble. If the dollar is going, I don't expect it to be one-way traffic forever. It might be a little bit of a bumpy road. So there'll be opportunities on the other side, but I'll keep my bias to one side as well. Right, let's have a quick look at what's coming up later. NFP and Canadian jobs are the highlights of the day. So we'll go over the numbers here. Headline non-farm payrolls expected at 191k versus a 272 prior. So anywhere around that number will mean everything's tickety-boo still in the jobs market. And this is still again becoming the last domino to fall, while we're seeing weakness just cropping up elsewhere in other sectors. As usual, keep an eye on the other numbers. Unemployment rate is obviously important, expected to come in unchanged. As we've been saying, that the market might get out its pram a bit if we get a 4.1 or something like that. Obviously, the higher it goes, the more it will fall out the pram, throw its toys out the pram. Unemployment at 4.2% isn't a disaster, given how long it's been down here. We can't expect these numbers to stay down this low forever. You can see it's, take out the COVID blip, shall we say, we're still down at historical levels. 5-6%, that's saying something else. But 4.1, 4.2, it's not a big deal, though the market might decide otherwise, as I say, start throwing its toys out the pram. The trend is going to be more important than this number. But as always, you need to match it off with that participation rate. Now, the participation rate normally, just sort of while things are ticking along, it adds or subtracts the unemployment rate. If the participation rate drops, that means people are dropping out the market. It can mean the unemployment rate goes down. So if you see lower participation rate, but the unemployment rate rising, that's a negative signal. If that rises and the participation rate rises, it's not such a negative signal. Now, this number is going to gain significance over the months ahead if we continue to see this weakness elsewhere, because if this number starts dropping, irrespective of what the unemployment rate does, the Fed are going to be worried about why people are coming out the market. Does it mean they're giving up looking for jobs? That sort of thing. So these numbers can take on different contexts at different times. It's a bit like wages. At one point, wages is important for the inflationary aspect. Now everyone's looking at the unemployment rate rather than wages. So it's all, these numbers, as I say, they can change importance from time to time. So I'm going to keep particular eye on that participation rate and what it means for the medium term, as to whether we're seeing some proper weakness, underlying weakness coming into the jobs market. So wages, they're expected to drop to 3.9%. Again, these have been hanging around this 4% level for a pretty long time, 4 or 5%. So, even a drop down to, 3.5% isn't going to be that big a deal, but the trend is your friend. So if we start to see these numbers coming down significantly over the months ahead, that's going to play to the dovish side of the Fed. So that's how I'm going to count these numbers. As I say, don't rule out the market having a paddy over some mild weakness, but read the numbers, read what it actually really means, rather than getting sucked up in the market narrative. Obviously, if you're in trades and the market moves your way, take some money off the table. If it looks bad, really bad on the first glance, the market's going to move that way. Take some money, because once the propeller heads dig into it, and they may come out and say, yeah, it's mildly weak, it's not really weak, and then you'll see a bit of a reversal. Canada as well, we've got that jobs data there. The unemployment change expected to see 27,000 jobs on that, so another positive one coming in there. Same things, look at the unemployment rate, participation rate, look at the revolving door. If jobs are lost, gained, where are they lost and gained, full-time or part-time? And then obviously the wages numbers there. So if you're trading the loonie, you need to be careful, because you've got both these numbers. They could both go the same way, they could both go opposite directions, which means, strong US data, weak Canadian data is going to see the loonie rally double, or with a bit more oomph than if the data was offsetting each other. Okay, you got any thoughts for trading this one? Is this the time we see a dodgy number? Have you picked your number? I haven't picked my number yet in the competition.
Yeah, I have my usual one. I'm going to slightly, and that's what makes a market, I'm going to slightly have a different opinion. I think if we do get a 4.1, the market is going to put it in the column of the flags, and we could get a bit of a continuation hammering of the dollar this afternoon. That is my feeling. Now, of course, I mean, we've seen many of those reports defy the laws of gravity, so it could be that another surprise is upon us. Yeah, look at how the participation rate impacts, because seen some reports saying that due to the participation rate, we could still have an unemployment rate which comes in as expected, or even a tick below. So we need to watch that. As far as the Canadians are concerned, we are on relatively important dollar-CAD numbers. So as you say, like the double whammy, the saloon doors will be wide open, ready to slam. I'm not in a hurry to trade too much Canadian unless we see an outside move, really. And I would say if you get a bit of a weaker one out of Canada without being a disaster, but then like another pretty decent one in the US, and we would fly back up to 137 or so, I may give it a go. But also looking at oil holding up relatively well, equity markets doing okay. I could think that perhaps a good one in Canada may have a slightly bigger impact this time. That is kind of how I look at it. But again, I'm not really in a hurry to trade Canada. As far as the US report, I'm still a bit short dollars. I did already manage a few and parts of my position, because as usual, I usually try to be reasonable and keep an open mind for both sides of the picture. But I'm also looking at if we get like just a mildly good one in the States, or as expected, and the market wants to buy back a few dollars that it sold over the past 3-4 sessions, perhaps pick up a cable again a bit lower if I see it, or an Aussie or so. or gold. Yeah, I'm already a little short euro dollars, but and I don't really mind because I'm winning the money, so that's fine. But I'm more looking at that side. If I get because I really think if we get a bad one, they are going to put the market is going to go negative dollars, I think, just on the back of everything that we saw this week, and the ISM and so on and so forth. Just one thing is that, as you already want people to dissect and digest the numbers, be careful because we are in this semi or pseudo long weekend for the Americans. There may be less liquidity than we'd hope for in the market this afternoon. I can see some liquidity providers going on the defensive, so watch out what you trade, when you trade, and the algos could go a little bit wide and wild.
Yeah, watch your spreads over these data points. Things could get a bit wild, as Kay says. Yeah, dollar CAD's an interesting one. We're bang on the level here, 137, 136. You know, this has been a big support area. You know, being so close to it with big data upcoming from both US and Canada. I'm not looking to trade it at the moment. I've still got my sell stops in. I'm just sitting here wondering whether just to pull those rather than get potentially flipped out over the data. I would consider selling a rally maybe to 136.50 or even better. That's going to be my bias for trading this data, just to sell good news, sell a dollar rally. Just picking the poison will be the differential, though. Aussie dollar still looking strong, so that might be a contender. You know, you want to try and get on who's the strongest horse when looking at fading any moves that go against the trend at the moment or the trend of the day. And Aussie's one of those ones that's looking particularly strong. I have started a little short in Aussie Kiwi. Been speaking about this one up into this 110, 111 zone. You know, it's been a bit of a range top up here, and we've always, you know, come back to this magnet. So yeah, I can't see the Aussie going too far at the moment. Yeah, they may turn to a hike, but I doubt they're going to hike, go on another hike cycle, another, you know, 100 pips or anything like that. So, and they would rather not, like the rest of the central banks. So I'm just starting a little short, technical short against these levels up here, 110s, 110.50 and up towards at 61.8 fib there at 111. Through 111, I'll declare it wrong. So that's what I'm trying on that one. So again, the Aussie is looking the strongest horse at the moment out of that and the Kiwi. So on good NFP data, Aussie will be in the frame. Aussie dollar will be in the frame for a long if we see a decent dip. Kay, you didn't get to see a lot yesterday, so I'm going to bang it over to you, mate, and then you can be in charge on how long the show goes on for.
Yeah, 3.5 minutes instead of 2 yesterday. All right, let's look at one that has had an interesting price action over the past few days, and that's dollar Swiss. And the reason why I'm bringing this up is that I always like to look at both sides of the coin, right? We can never exclude an against the grain bumper report in out of the US this afternoon, and this is one that I will have keep an interesting eye on in case we get a really good report, because recall we had a slightly lower CPI. They did cut interest rates in Switzerland as well. SMB not actually, well, first quarter, but that was the first quarter. Bought a few currencies, sold Swissy, but very small. So this is still one that we should keep an eye on for the other side, if anything. We kept here. Look, we've been forming this kind of channel here in the dollar Swiss. We ran up, and actually I didn't notice that straight away. But this is a very, very good cap here, around 90.5 in the dollar Swiss, trading around 89.80, so a while away, a little bit away. But this is one. Of course, if the report is bad, people will sell dollars. I mean, probably against everything. And then we are probably going to have a look at this lower. But I always like to look at certain currencies which are more inclined to move in case of a good or a bad number. And I think taking into account what's happening in Switzerland and so, this one could be one that breaks in case we get a really, really good report. So if we get a better report, watch out what's happening around 90.5. If it caps again, then people will sell dollar rallies, okay? But if we start to break and hold 90.5, this thing could actually go back up, all right? So this is one that I'm looking at for the other side of what I have as a mild bias right now. Now, getting back onto what happened in the metals, broken this little trend line here, and gold already holding around the 23.5. This is your first level, around, well, call it 45.50. Yeah? It's on data. We always need to allow for a bit of algo moves around levels, not take the levels too seriously. And then below, if we get a good number around 23.35.40, I'd say there really, because this is still a very fresh trend line as well, and the level as well is very fresh, so on a real good number, perhaps have a revisit of 23.35.40, and there we look at what's happening. If the market isn't buying the good number, we should stop somewhere around here, having like a bit of a stop run, and then start to go higher again. Okay, of course, and I've highlighted this 63.68. If it's a bit of a weaker number, and again, I'm still of the opinion that it's not going to take a big miss for this move to continue. So of course, the bigger the miss, the faster gold will go. And if it's really a very, very, very bad report, gold should go faster than silver as well. Okay, yeah, then I think if it's a miss, then this should continue higher, at least up into the 23.80s, and why not? You know, since the move started, just continue to grind higher. So this is how it looks in gold. Silver still the same, 30.31. And then see what happens, you know. Again, if we get a surprisingly good report, perhaps we could have a bit of a stop run here, and then we look at what's happening around 29.5 if we get down there. If it's a real good report, if the market comes in again and start to buy it again, it could all be like a bit of a fake lower and then start to go higher. But I'm really far from fully in full position there. But if it's a gently weaker one, I think this one is going to push as well, and perhaps I'm going to add to my position again. Euro still broadly in that triangle, and again, as we've been saying, I mean, you can trade the euro, and then we are going into the weekend, into the second leg of the French elections. I think this one is really a jobbing, or as people in the retail market like to call it, a scalping one. If it's a bad report, it's probably going to go, and it could trade up to 109, and because the market is maybe still a bit short because of European data and those French elections. But do I want to keep it in over the weekend? I'm really not sure, because I really think it could get still back to being messy in France. And then look at the data that we had. Yeah, what the red data that Ryan showed. I mean, all those green shoots are wilting very, very, very quickly in Euroland. So I'm not a big fan. So this could perhaps be one, if the report is good in turn. Okay, you break back below 107.90, that could accelerate, like a little bit in line with what is happening in Swiss. This could be one where all of a sudden, if it's a good report, the market wakes up and say like, oh, we've got a potential crap coming again over the weekend in Europe, and perhaps this is going to be one of the faster ones to go back down. Okay, could go all the way back down to whether it's 107.60, which is a decent level, or even 107 and a quarter. But for it to go a big figure down in today's environment, today's mood for the dollar, it's going to have to be a real big beat. Of course, 106.65 now is the point of no return. But I doubt that we could go as far today. But never say never. Cable, as Ryan already said, looking pretty decent. It's the certainty of having what the market needed. And if you look at, and I invite you to do so, you look at the UK assets, and you look at the comments that market participants are giving, they do kind of like in the immediate what they see. So UK assets are doing pretty okay. You see the gilt short-term, well, the 5-year gilt is hanging around there, but they're okay. And lower yields doesn't mean that Bank of England should be cutting also. I think lower yields in current case means that, and that's sometimes you trade it differently, right? Means that the market is liking things a little bit, and they're buying a bit of UK bonds. And then when you look at the FTSE, for instance, it's doing pretty well too. I don't even think I have it on here, the FTSE, but not in my watch list here, but I have it on my other screens. But give you an idea, the FTSE 100 is up 0.25%. The FTSE 250 is up about 1% on the day. So that means the market, in this case, lower yields don't necessarily mean a bad thing. It means that people buy perhaps a bit of UK bonds, a bit of UK equities, and actually it is relatively positive for the sterling. So I would say get a move back down here on a small better report. Watch already what's going on around, but maybe already 107.2730, 127.20 down to 126.90. Okay, this one comes in a little bit lower, but I'd say watch a reaction, and a reaction in this zone here. If we get a good report in the UK, you could see a move, the algo move, and then all of a sudden turn around and go up. So this is still one that I'm actually looking at for a report to counter dollars, or a continuation if the report is weaker. I think cable could really go for a walk if we break below 128 figure 10. Okay, it has to go below 126.60 now to say the whole party is probably over and we go back down. But I don't see it happening too much today.
I could see cable 129 on a stinky US report.
Yeah,
today.
I am with you there. Back here, I'm completely with you there. And you know, if the report is really bad, we are at the end of the week. There may be people off. Watch out for next week Monday. If there's no accidents anywhere, or no like big trouble in the Middle East, for instance, this could actually print 130 over the next sessions. Why not? Huh?
Yeah, exactly.
I know this could print 130, and this is one that I feel like not overly confident, but this is one that really I'm keeping an eye on to see like this could really go, you know.
Yeah.
Yeah, Ryan, you looked already at the dollar CAD, right?
Yeah.
Okay. So lastly, Aussie doing pretty okay, and look, we are holding this little break here, break of the trend line here, and around the prior highs, which are around 67 the figure, 35 pips away on a very good number. There may be some fragile stops just below here, and then watch what we are doing again in those mid to high 66s. Okay, we could have the same thing and start to go on a bad report, 67 60s, but then here. I know we've been higher in the past, but here, look at this big convergence of a lot of stuff around here. 68, 10, 20, 10, 25. If that goes, I think we could be reaching 69 in the upcoming sessions. Kiwi roughly the same, still wrestling, still have to overcome that 61, 40, 55 again, and then maybe push higher. And I think I've kind of done the rounds of what I wanted to show, really. you've shown the makes, the rand. I think for change, I'm not going to catch a knife here, especially if the number is coming out a little weaker. I don't think it's very useful to go and catch a knife on a weaker jobs report. If it's stronger, then we're probably going to continue to range trade this one. And in contrary to other pairs where the dollar could see rally sellers, perhaps this one is rather going to stabilize instead of then coming much lower. I do think, though, on the other hand, that the dollar mix is a little bit in danger to break back down. But Ryan already covered that. 29s would be new highs for the year. That's you're talking about cable, yeah, Gav? I guess so. Yeah. It would. It would. A big break if we go through 129 up there. Wow. Okay. Alrighty. Let's hope we called this one right. And we covered both ends, so we must be right on one side at least.
Well, we're traders. We've got to have a plan for both sides, haven't we?
Yeah, exactly.
So we're not here to call stuff. We're here to trade stuff, and we look at all opportunities. Right, we're done. We are done for the week. Thank you very much to all you guys and girls for coming to the Flow Show, supporting us here. Thanks as always, K-Man, for your valued insight. We hope we've done you proud this week, guys and girls. Trade safe for the rest of the day. Have a wonderful weekend. Get your minds refreshed, and we'll do it all again next week. Have a good one, everybody.
Thanks, Ryan.
Cheers, mate.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.